In the world of trading, indicators are essential tools that help traders analyze price charts and make informed decisions. One such tool gaining popularity is the SuperTrend Indicator. This powerful indicator simplifies trend identification and potential reversal points, making it a favorite among both novice and experienced traders. The SuperTrend Indicator belongs to the family of trend-following indicators. It's designed to highlight the prevailing direction of price movement, clearly showing whether the market is in an uptrend or a downtrend. This is visually represented on a price chart as a line that trails above or below the price bars. What sets the SuperTrend apart from other trend-following indicators is its ability to adapt to changing market volatility. It achieves this by incorporating the average true range, or ATR, a measure of price fluctuations, into its calculation. By understanding how the SuperTrend indicator works, traders can improve their entries and exits, manage risk effectively, and ultimately increase their chances of success in the market. The SuperTrend indicator provides a clear visual representation of the market trend. When the indicator line plots below the price bars, it signals an uptrend. Conversely, when the line moves above the price bars, it suggests a downtrend. This simple visual cue makes it easy for traders to quickly assess the market's direction. It eliminates the subjectivity often involved in visually interpreting price charts. Beyond simply identifying the trend, the SuperTrend also helps traders spot potential trend reversals. A reversal occurs when the price breaks through and closes on the opposite side of the SuperTrend line. For instance, a break above the SuperTrend line during a downtrend could signal a potential shift to an uptrend. These reversal signals can be valuable for traders looking to enter trades early in a new trend or exit existing positions before a significant price move against them. By providing clear buy and sell signals, the SuperTrend indicator helps traders make more disciplined and timely trading decisions, potentially leading to more profitable outcomes. Understanding the calculation behind the SuperTrend indicator can provide traders with a deeper appreciation of its inner workings. At the heart of this indicator lies the average true range, or ATR, and a user-defined multiplier. The ATR measures market volatility. A higher ATR value indicates greater price fluctuations, while a lower value suggests a calmer market. The SuperTrend indicator incorporates this volatility measure to adjust its sensitivity to price movements. The multiplier acts as a scaling factor for the ATR. A higher multiplier makes the SuperTrend less sensitive to price fluctuations, resulting in fewer trading signals. Conversely, a lower multiplier increases sensitivity, potentially leading to more signals. The actual calculation of the SuperTrend involves determining upper and lower bands based on the ATR and the chosen multiplier. The indicator line then switches between these bands depending on the price action and the prevailing trend. While the calculation itself may seem complex, traders don't need to manually calculate the SuperTrend. Most charting platforms automatically plot the indicator, allowing traders to focus on interpreting its signals. Section 4. Trading with the SuperTrend entries, exits, and combinations. The SuperTrend indicator offers a straightforward approach to trading. Traders can use its signals for entries, exits, and even combine it with other indicators for a more robust trading system. For entries, a buy signal is generated when the price closes above the SuperTrend line, suggesting the beginning of an uptrend. Conversely, a sell signal occurs when the price closes below the line, indicating a potential downtrend. Exits can be timed by closing positions when the price crosses the SuperTrend line in the opposite direction of the trade. This helps traders lock in profits and avoid giving back too much of their gains. However, relying solely on the SuperTrend indicator can be risky, especially in choppy markets. To enhance its effectiveness, traders often combine it with other indicators or technical analysis tools. For example, using the SuperTrend in conjunction with momentum oscillators like the RSI can provide confirmation of trend reversals and improve the accuracy of trading signals. The SuperTrend indicator can also be used to set trailing stop-loss orders. Traders can place their stop-loss orders just below the SuperTrend line during an uptrend and above the line during a downtrend. This dynamic stop-loss strategy helps protect profits while allowing trades to run as long as the trend remains intact. Section 5. Advantages and disadvantages of the SuperTrend indicator. Like any technical indicator, the SuperTrend has its pros and cons. Understanding these can help traders make informed decisions about incorporating it into their trading strategies. Advantages: simplicity. The SuperTrend is visually easy to interpret, making it suitable for traders of all experience levels. Clear trend identification. It clearly defines the prevailing market trend, reducing ambiguity in chart analysis. Adaptive to volatility. By incorporating ATR, the indicator adjusts to changing market conditions. Potential for early entries and exits. It can provide signals for entering trades early in a trend and exiting before major reversals. Disadvantages. Lagging indicator. The SuperTrend is a lagging indicator, meaning it reacts to past price data, which can result in delayed signals. False signals in choppy markets. During periods of sideways price movement, the indicator can generate false signals. Over-reliance on a single indicator. Relying solely on the SuperTrend without considering other factors can be risky. Despite its limitations, the SuperTrend indicator can be a valuable tool for traders when used correctly and in conjunction with other analysis techniques. Section 6. A practical SuperTrend trading strategy. Let's explore a practical trading strategy using the SuperTrend indicator in conjunction with the RSI. Time frame, 1 hour chart. Indicators, SuperTrend with a multiplier of 3, and RSI with a 14 period. Entry rules. For a long trade, the price should close above the SuperTrend line and the RSI should be above 50. For a short trade, the price should close below the SuperTrend line and the RSI should be below 50. Exit rules. For a long trade, exit when the price closes below the SuperTrend line or the RSI falls below 50. For a short trade, exit when the price closes above the SuperTrend line or the RSI rises above 50. Stop loss. For a long trade, place the initial stop loss below the recent swing low or a few pips below the SuperTrend line. For a short trade, place the initial stop loss above the recent swing high or a few pips above the SuperTrend line. Trailing stop loss. Move the stop loss to a few pips below the SuperTrend line as the price moves in your favor for long trades. Move the stop loss to a few pips above the SuperTrend line as the price moves in your favor for short trades. This strategy combines the trend-following capabilities of the SuperTrend with the momentum confirmation of the RSI. It aims to capture significant price moves while minimizing losses.